All right, it's March 4th. Let's look at some markets. Big story, the Iran war. Let's take a look at BZ equals F. Wow. It's a pretty huge move. Getting stretched, almost at 80 RSI. So the Iran war and oil are really two of the biggest stories right now. Another way we can look at this is we can look at USO, gasoline ETF. So we can see that's broken out of a 2-year range. That's pretty wild. Coming up into its previous all-time high at around $92. Wow. So another thing I was looking at this morning was Bitcoin. So Bitcoin has actually been pushing up a little bit more. It's had a really bad few months, but starting to see some upward momentum here. A little bit of a bounce, not anything crazy, but coming off of that low, it was all the way at 64. Yeah, if we look at the long-term trends for Bitcoin, pretty bad situation. We were kind of testing that supply zone around 64, 68, which is the previous all-time high. Let's take a little closer look at that. Let's do a little more in-depth look at crypto in general. So we have this crypto overview prompt that pulls a lot of these different data sets. It's clearly been a risk-off situation for crypto in the last few months. All right, so we got 2.5 trillion market cap. Bitcoin dominance starting to push back up, but sort of been consolidating. Fear and greed index has been very low. People have just been terrified. And we made a low. We haven't seen a low like this since 2022. So maybe that could be a bottom signal, but a little bit sketchy. Total value lock fell off a cliff. Kind of hitting possibly a support, but not jumping into something like that. We can also look at these ratios. So the ETH Bitcoin ratio, you can see has just been bleeding for the last 200 days. Same for Sol Bitcoin for the most part. Looks like a little bit of uptick in the last couple weeks, but nothing crazy. And then Sol ETH, kind of a mixed bag. But trends all across the board are bearish for crypto, so it's kind of in a risk-off tone. So yeah, not too stoked about crypto. Maybe there's a bounce play right now, a support bounce play off high volume zone, but that's not really my type of trade. One thing I also want to look at is have some different things. I pulled this using Claude Code, sent it on a research mission this morning to go track down all of the trending stories of the day. Geopolitical shock reprices risk assets. US-Iran conflict, Strait of Hormuz. 20% of global oil have triggered a broad flight from risk assets, a surge in energy prices, and historic gold volatility. That's another one. Let's look at gold. This was a big move down in gold. I think it moved down 5% in a single day. We're seeing a lot of elevated volatility in gold. I mean, we had this big crash over a few days. I mean, that was a legendary drop right there in the history of gold. And 5% is pretty significant as well. I mean, keep in mind, gold has just been on a complete dominating trend. So the S&P 500 in green, gold. So maybe it's due for a pullback, but it's really been going crazy. And then you have things like a surge in energy prices and historic gold volatility. Yeah, the interplay between gold and oil is pretty interesting. Let's just look at, so maybe let's just do the last year. We can see oil starting to come up, gold coming down. Wonder what that means. Stagflation fears. So there's the oil shock that's causing this big move up. There's some volatility in gold. We're seeing Bitcoin moving up. We're seeing stocks kind of stall out. So we're seeing defense stocks and Yeah, look at that. This is the wartime trade. Northrop Grumman Corporation hitting all-time highs. Lockheed Martin hitting all-time highs. RTX. Man, that's a good looking asset right there. That's been a nice trend over the last couple of years. That's one to keep on the radar. So we have defense and energy rotation. I mean, there's been this whole story around AI and semiconductor companies for a while. So now we're starting to see kind of the rotation out of those and then into things like energy and defense, given the surge in oil and also the Iran war. Crypto rebounds as alternative safe haven. I don't know about that, but maybe. It's definitely due for some moves up, but it's also, I don't know if I'd ever call that a safe haven, to be honest. Yeah, this is the big story. We got the oil shock. The Fed funds rate is held at 3.5. Powell's going to be out of here in May 2026. Oh, let's take a look at VIX. The volatility index gives us some hints about what's going on here. So it is surging upward. Let's look at, so we can compare that to the S&P and just kind of see how the two interact. Kind of on different scales, but yeah, I mean, we're pushing up into those sharp edges, you know. We might see some bigger move potentially, but usually gets stuck around 30 to 40 during these scares. But it can go much higher if things get bad. In an increasingly volatile situation here. The Asian markets are in free fall. That's interesting. So yeah, we're seeing a risk-off market right now. Pockets of opportunistic rotation. That's a good way to put it. Defensive. Equities are selling broadly. Let's look at, so if we look at the semiconductors, so let's just do, one that I've been watching is AVGO. We can look at NVIDIA, TSM, maybe Micron. So we've been in this AI play for so long and starting to see that unwind and seeing rotation into energy and defense along with this whole Iran war, which kind of makes sense. So yeah, Taiwan Semiconductors, Broadcom, NVIDIA. NVIDIA is holding up better than the rest, but not looking amazing. Been kind of stuck in this consolidation for a while. We're kind of entering a new regime of the market. We've kind of been in this exciting AI trend, and now we're kind of getting into a new risk-off. People are worried about war. Gold has surged to all-time highs and been going crazy. You have oil spiking. We're now rotating into defense and energy. I mean, this makes a pretty clear picture of what's going on here. Let's look at Exxon is another one that one has really pushed up a lot. Yeah, so over the last year, it's really surging along with the prices of oil. Interesting, this was kind of a leading indicator, a little bit. So what is the play here? I think being more defensive makes a lot of sense. Not going crazy with risk. One that I've been watching is, let's do HEI. So HEICO. Kind of just in a support volume zone here. Tried to push out, kind of getting stopped, but this is one of those, if you look at compared to the S&P, has been moving upward. You look at the last 5 years, it has outperformed pretty significantly. So it's an aerospace company. I think this was in Warren Buffett's portfolio. I think that's where I originally found it. The play was looking for this high volume zone, so I was watching this support volume. So from 305 to 323. So that's basically, if we look at this whole range, so 305 to 323. So that's a high volume zone. And when we were up here, there was kind of this risk that we were going to see a dip into this zone. And we did actually end up getting that. So we kind of flushed out the stops and bounced from there. So I bought a little bit around 312 with a limit order. So now I'm just kind of riding that to see where it goes, but using the 200-day moving average as kind of a stop point. So that's around 318. So we'll see if we can hold that. But I think in this kind of environment, leaning towards defense, energy, becoming a little bit more risk off, especially the AI trade might be kind of running its course. I mean, just looking at some of these semiconductor companies, they're clearly in a bubble of some kind. Like, that is ridiculous. We're talking 574% increase in 3 years versus the broad market is 72%. So that's kind of crazy. And we are seeing a sharp decline. So you got to be careful with the AI trade. You don't want to be on the wrong side of that. AI is amazing, but the semiconductor companies have really been stretched to a new limit. So I think that's something to just be cautious about at this point, because it's no longer the obvious trade. I'm gonna look at this. So sector breakdown. So this is a flow that I have running every day. So basically it gets the 200 SMA for all these different asset classes, so we can kind of see what's moving. Let's see, so agriculture, DBA. A lot of things are bullish right now. Or at least everything has been in a positive uptrend for quite a long time. One thing to think about is the dollar. So that might be another good thing to look at here in a minute. But you kind of have this push and pull between risk assets and the dollar, and gold and the dollar. And we've really been in a risk on period with all the stocks going crazy. Let's actually just look at, so we'll do a deep dive we'll look at dollar futures and then also the dollar ETF. Yes, we're seeing a bounce in the dollar. So this is an interesting, so if we look at the S&P, you can see that usually the S&P is kind of going counter to the dollar. So when the dollar is surging upwards, that usually is not good for the stock market in general. So you can see this period of upward movement on the dollar futures. You can see we had this big correction here in the stock market, and then pretty much topped out, the dollar topped out at the bottom of the stock market. So seeing upward motion in the dollar over the last, I don't know, few weeks or the last month. Something to watch. We kind of have this triple bottom situation going on in the dollar. So if the dollar starts really moving up, that could be bad for gold and for everything pretty much. Everything that's not the dollar. Yeah. All right, so let me just try to summarize. So here's what I'm seeing. What else? So you have the Iran war, you have the, let's say dollar is, All right, so I basically just put together, this is kind of a description of what I'm seeing in the markets right now, all of the different parts. So the Iran war, oil shock, the AI trade is looking toppy, markets are risking off, semi companies are putting in bigger down moves, looking weaker, markets are rotating into energy defense, dollar is showing a potential bottoming pattern, gold and metals have had a historic run and we have increasing volatility. VIX has spiked is another thing to include. So big down move the last day as well. So we've had a big bubble in stocks, especially semis with the AI narrative. Historic metal bull market, crypto has been down sharply the last few months. Risk off in general. Fear and greed has been making new lows. Money rotating out of AI into defense and energy. So then I'll say, can you gather evidence around these to create an in-depth dashboard of supporting data and news articles? Let it cook. All right, so we got Bitcoin, S&P, and that's not looking too great, to be honest. Things showing some weakness there. Descending highs, just kind of losing momentum, pointing down. A little bit sketchy looking. Okay, so we got that. We got gold. Big move down, kind of running into this $5,000 resistance. It's kind of a psychological level as well after a historic run. Got Lockheed Martin pushing up the all-time highs with the Iran war defense trade. You got the NASDAQ kind of showing a little bit more weakness than the S&P because it's a little more concentrated in those AI semi companies. You got the SMH semiconductor ETF showing a pretty violent move over the last week down. I feel like March is usually kind of a time where sketchy things happen. Just throwing that out there as well. Let's look at RTX, Exxon, been pushing up. Crude oil, huge surge up. That's wild. VIX is surging up. So yeah, that's kind of the backdrop here. So weakness in the S&P. Yeah, that pretty much all checks out. Look at Bitcoin. Sad. Sad. Getting overbought on crude. Gold has just outperformed everything. Okay, RTX is actually pretty interesting too. RTX has been very efficient over the last few years. But yeah, I mean, these are some big drops. I mean, for Bitcoin, 14%. I mean, for gold, it dropped 11% in a single day. That's pretty wild. That doesn't normally happen. Yeah, so high volatility in crude. Let's see what else we got here. So Lockheed kind of pushing the upper bounds of its volume. We are kind of in this high volume zone in NASDAQ and the S&P. I mean, you could think of that as kind of a potential distribution like a Wyckoff distribution, because we've had this big surge up and now we're kind of getting this rounded top and seeing a lot of volume. So it would be interesting to see if this is kind of a transfer of like who's buying. Is retail buying or are the institutions buying? I think we can look a little more at that, but there is a lot of transactions going on in this range right now. RTX pushing the upper. Yeesh, that doesn't look great. So there's really no volume support for semis until 230, 250. So we're kind of in no man's land a little bit with the semis. We've got a lot of air underneath us, so that's something to be a little bit concerned of. Yeah, pushing all-time highs with Exxon. All right, so then you got Bitcoin moving up a little bit, but Bitcoin dominance has moved up. Fear and greed is very low. The dollar pushing up. Dollar currency index is looking pretty green. I mean, the last year it's definitely down, but things have been moving up and momentum is definitely pointing up. All right. Oil shock risk. Crude has had a sharp, fast move higher over 1 week and 1 month. Event-driven risk premium. Hot short-term momentum over bought conditions. Coverage tying the move to Iran conflict, Strait of Hormuz disruption risk from Time magazine. Volatility regime shift, VIX spike, equity drawdown impulse. VIX is up sharply over the last day, week, month, aligning with genuine volatility. Late cycle chop, yeah, that sounds about right. AI semi trade looks toppy, semis underperforming on down days. Sell-offs concentrated in prior tech winners during the geopolitical shock. Makes sense. Oh yeah, that's another interesting story. If you look at the chip versus software, it's like the hardware versus the software has been an interesting, we can also look at that. So we'll look at hardware versus software. And then one other thing I wanted to look at is the yield curve. Inversion and kind of the economic context here. Energy plus defense. So defense names are beneficiaries of the war. True. Energy strength tied to crude spikes and supply disruption. Makes sense. Dollar index positive over the last month, still down over a year. Counter trend rebound basing attempt. Historic metals run, higher cross asset volatility. Gold very strong over the last year. It's a crowded safe haven and more volatility. So crypto's been risk off, hit hard over the last 3 to 6 months. Risk off. Crypto crunch. Fear and greed index is cooked. In-depth dashboard section plus widgets. let's see here. So, kind of a lot. Let's see. Can you create a show a table using I like creating these little dynamic tables to show things. All right, that's pretty good. So yeah, Bitcoin red, dollar looking bullish, VIX is moving up, gold showing cracks short term, crude very bullish, Exxon bullish, RTX, Lockheed, semis are starting to crack in the last month, NASDAQ cracking over the last 3 months, S&P cracking over the last 3 months and the year to date. So I think that's all pretty interesting. All right, so one other thing that I would add in here, maybe, so let's just do, if you get on here, you can do economic review. So we'll do that, and then we'll say, add this to the, so analyze the economic data provided and write a high-level summary. I'll actually say this. That's interesting. That's moving back down. So no recession yet, technically. Had some pretty... Look at this. If you look over the last 20 years, we hit a sentiment low, pretty close to the lowest we've seen in 20 years. So people are not generally feeling great. I mean, we had this 2022 all-time, or maybe not all-time low, but lowest in 20 years, and then tested that same level just a few months ago. Sad. Elevated. Okay, so VIX is elevated. Fed balance sheet has been draining liquidity, so basically pulling money out of the markets, selling, not buying things. So that's kind of been restricting. So money stock has been rebuilding, but not in a straight line. Not a liquidity boom. Labor market still hasn't cracked. I mean, there has been some job loss, but not on a massive scale yet. At least not showing up in the unemployment rate. Jobless claims are low. The Fed funds rate has been moving down. So the Fed funds rate is definitely easing since the peak that we had last year. Financial stress is still low, so we're not showing intense stress yet, although the VIX is kind of hinting at that potentially. So the curve has re-steepened. So basically we had a yield curve inversion. So if we go back and look at this, so we've had this, if we go back like 10 years, so we had this very intense inversion of the yield curve, which typically aligns with a recession setup. And then when you see things move back above zero, so we move back above zero right here, and then we've been sustaining above that level. So that tends to be kind of the recession window opening up. So we haven't seen a recession yet, but we have seen elevated levels. So it's a bit of a red flag. So if you look at this, we popped above zero on the 10-year 3-month. So that is a bit of a recession setup. So I don't love that. That's a bit of a risk-off signal, at least historically. But still no recession, technically. Unemployment's not really showing us a big stress signal yet. We're definitely depressed. We might not be in a recession, but we're in a consumer depression over the last 10-20 years, which is nice. Shock-driven risk-off, not a classic macro breakdown yet. Exactly. So labor is holding, stress is muted, recession flag is off, equity volatility is repricing, liquidity is mixed, the balance sheet is down, rates are lower, the curve is positive again, and the market has not cracked yet. And AI has kind of been holding up the market over the last year or two. Rotation into energy defense makes sense under this macro misc. The macro core is not recessionary, but geopolitical inflation risk jumps. The oil beta defense while trimming hydration growth. Sentiment is the weak link. USMC is low. Fear and greed is low. Uncertainty are driving the swings. Okay, create one summary paragraph. So over the last couple of years, macro backdrop has quietly improved in some hard data ways. Rates are lower, yield curve is re-steepened into positive territory, jobless claims are low, no official recession. Markets are acting jumpy because liquidity has been tightening on a smaller Fed balance sheet. Sentiment is weak, geopolitical shock hits, oil jumps, volatility reprices higher. Investors de-risk high beta, long duration winners like AI and semis. Money rotates towards more shock resilient exposures like energy and defense, while gold and crypto swing around the broader risk appetite. Sounds pretty solid. All right, so I think that's a pretty in-depth review of where we're at right now. I think we pretty much have a good look at things. One thing I did also want to look at as just another interesting story. So this whole idea of hardware versus software. So can we look at big software companies versus semi companies? Or let's just do Let's do this. Let's do 1 month, 3 month, 6 months, 1 year, 2 year. So there's this hardware versus software. Software has really been getting hit hard. So look, you have Microsoft, Oracle, Adobe, Salesforce, ServiceNow. I mean, those are the big software companies just getting hit really hard. And AI has kind of had a negative effect on software because people are realizing that you can actually create software a lot easier now. So that's kind of an interesting thing. Let me get a little more in-depth here. So we can see Microsoft, Oracle, Adobe, Salesforce all pushing down. We have Apple, Nvidia, AMD, Intel, Broadcom. All of these are moving big upwards. So software is more uniformly weak. So let's just say so yeah, that's the idea, that coding agents are devaluing software. Claude Code's showing that you can actually make software for a lot less cost upfront. So are these software behemoth giants really worth what they used to be? AI scare trade hitting SaaS. Sharp rotation out of software, fears that fast improving AI tools could upend subscription enterprise software economies. Woo! Yeah, you have the SaaS apocalypse framing. The SaaS apocalypse. What a great name. Yeah, Anthropic's been talking about, oh, we're gonna automate away all the jobs. Even the Microsoft AI guy was like, oh, we're gonna basically automate white collar work in the next 18 months. So yeah, I mean, we're definitely in a situation where AI is changing the game Like, it's really crazy. And so I think there are a lot of questions and open questions about whether software giants are going to continue to dominate like they have the last 10 years. So I think that's a big trend. And then you have this GPU boom, semiconductor boom over the last couple years. So we really haven't seen benefits of AI to software, which is an interesting thing. I would not have predicted that, but that's basically what's playing out. All right, so I think that's pretty much it. So let's see if there's any other interesting news that we can look at here. See, check out Yahoo Finance. All right, so markets are going to be opening here in about 10 minutes. So we got stock futures. So we can see NASDAQ is down 1%. So we got the Trump tariff, refund delay. Bitcoin is moving back up. Gold looks like it's bouncing as well. Oil steadies. Broadcom earnings are the latest to try to climb AI wall of worry. Let's see what that's all about. So Broadcom earnings coming up. Yeah, Broadcom has not been doing good. I actually have a trade in Broadcom and it hasn't really been making me any money, unfortunately. Really, the energy rotation was kind of the move. But it's also, if we look at Broadcom, I mean, it is in this sort of bearish period. One thing that I would look at, so below the 50, below the 200, pretty not great. Also looking like a death cross on the 50 and the 200. No, not looking too great, to be honest. Might be looking to cut that. We'll see. Chipmaker shares are down 24%, underperforming the index. Rotation away from large tech companies due to fears about the sustainability of hundreds of billions of dollars committed to AI. Yeah, I mean that's a fair read. That is a fair read. Crypto business has never been stronger. I don't know about that. That seems surprising to me. Just plug power. Good old plug power. Bro, I was trading plug power way back in the day. Let's see here. Plug. I swear to God, I got so lucky buying plug at one point and then just selling the exact top. It's beautiful. When was that? That must have been like 10 years ago. Yeah, over here. I just remember buying it. I mean, I didn't have very much, but I remember, I think I sold it at like $60 or something. Just purely because they needed the money. And then it just collapsed. Just went dead. Yeah, that's pretty wild. There's a lot of stocks that do that. They have their heyday and then they just have an enormous price bubble. I mean, that was the 2021 speculative mania and got cooked. All right, anything else? Anything else? Wow, MongoDB, jeez. MongoDB is a great database. I like MongoDB. What happened to it? That's ridiculous. Jeez, 22%? What happened, man? Oh my God. That's ridiculous. It's a pretty ugly looking stock in general. Yeah, I don't tend to buy things that look like this. If it's just not going up over multiple years, not great. He's getting to that oversold territory, heading into a pretty big volume block here. See, that's something you can look for, like when you have these volume zones and then you have kind of oversold conditions, like that tends to be an interesting thing. Yeah, look at this. Look at these massive volume spikes happening. 100%, 400%. So we're seeing huge selling volume and movement down. Pretty crazy. Ford is down too. I wonder if cars lose because of oil prices. Yikes. That's wild. Everything looks so nice, la 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 la, and then just unwind. But it did run into this $14. If you look at 5 years. I mean, look, it hit that exact, very predictable topping zone. $14 is not friendly to Ford. All right, so I think we got a pretty clear picture of what's going on here. So the AI trade is extended. We got wartime trades going on, sector rotation into energy and into defense. We've got a situation where you should be a little bit cautious because there's a lot of uncertainty in the markets and volatility is going up. So got to be careful out there. Things are looking a little bit sketch right now. So here's what I'm gonna do as a final. Let's see here. So we got. So I want to document this. All right, so create me a detailed email report called Market Review March 4th, 2026. Summarize all the key insights from this chat. Create some nice color-coded tables to present key information, or key data points. I still have to tell it to do this. Inline styles only. That's something I'm going to fix later. Tables to present key data points. Write a conclusion. Create a detailed email report called Market Review. March 4th. Summarize all the key insights from this chat. In a intro paragraph. Then write bullet points. All right, so now we're going to take this chat, we're going to boil it down to everything that we have read, so that's a lot of data. All right, so let's just let it cook and open up get my Gmail ready. Yeah, now we just let it cook for a minute. So if you want to use this tool that I'm using, the Blue Dot Terminal, just go to bluedotterminal.com. You can create a free account and try things out, and it gives you a little bit of tokens you can use for free to test it out, and then you can set up a custom daily market report to show you all the assets that you're watching and get a daily email report. So you have these things, flows, which basically run automatically. We'll get into that next time. But you can create a free account, you can try it out, and then if you like it, then you can upgrade to the pro account. That'll give you all the capabilities that I've been showing you here. All right, good deal. All right, so here we go. All right, so here's our final market review. Markets are acting risk off as geopolitical escalation risk around Iran is colliding with an oil risk premium, volatility repricing, and fading leadership of the AI semiconductor trade. The tape is showing classic rotation behavior, money moving toward energy and defense while the US dollar shows signs of basing after a sustained decline. Gold remains historically strong but more volatile, and crypto has been in a meaningful drawdown. Macro hard data, labor, systemic stress looks relatively stable, but sentiment is extremely depressed, making markets more sensitive to shocks and positioning unwinds. So we have the shock-driven risk off, VIX repriced higher quickly, broad equities are choppy with bigger drawdown moves in high beta areas. Oil impulse, WTI has surged over the last week/month, consistent with a geopolitical supply route premium. AIs, semis look vulnerable at the margin. Rotation into energy and defense. Dollar basing attempt. Gold strong but volatile. Crypto drawdown. Sentiment extreme low. Macro context is not broken yet. Right, we have key market tape. Interesting. Yes, we got some key stats. We can see the short-term weakness in the stocks. You can see semis are up really big over the last year. Energy has started to move up in the last month. Defense is moving up. Crude is moving up massively. Gold is historically elevated but pulling back. VIX has been surging up. Bitcoin is the reddest of the bunch. There you go. The market setup is best described as event risk plus position unwind on top of a macro backdrop that's not yet recessionary. The near-term driver remains whether the geopolitical shock and oil spike intensifies or fades. That will likely determine whether rotation persists. All right, so track oil and VIX together. Sustained highs would confirm shock regime persistence. Monitor SMH versus QQQ versus S&P. Continued underperformance by semis on red days equals de-risking still active. Watch the dollar. Continued dollar strengths can tighten financial conditions and pressure risk assets. Keep an eye on the initial claims and the unemployment rate. So deterioration would shift the narrative from shock to macro slowdown. So we're in a bit more of a shock than we are a true recession, right? And then use sentiment extremes as a reminder to avoid emotionally chasing gaps. And of course, this is educational only, not financial, legal, or tax advice. This is a no reply address. Yeah, so there you go. So that's the sort of thing you can do with Blue Dot Terminal. It's a chat interface. It's an agent. You can do all of these things. And then let's say you want to then set up a flow. So I have all these different flows. So market report. So this is something that you can have set up for free. So analyzes these different markets, creates this cool email report. I'll actually show you what that looks like. Let me just pull this up real fast. So you can create a free account and you can set this up to be sent to you every day, and you'll get a 14-day free trial, and then you can upgrade to continue after that. So we have a market report. You select some assets that you want to get updates on. It'll give you a summary. It'll give you daily, weekly, monthly growth, and then show you the 50 and the 200 SMA as well as the RSI, and then give you a conclusion. So this is it keeps me kind of framed for the day. I can look at the assets I care about, get a high level view, see if anything's changing that I need to, keep an eye on. So definitely a nice little daily report that keeps me informed. All right, I would say that will do it for today. So good luck out there, and I will see you again tomorrow.